Imagine multiplying your investment 10-fold, 20-fold, or even 100-fold. That's the potential power of crypto trading. With the promise of high returns, the crypto market is open to anyone with an internet connection, offering a unique opportunity to diversify your investment portfolio. Furthermore, the global reach of crypto trading means you're not confined to your local economy. Now, who wouldn't want to be part of this exciting, fast-paced, and potentially lucrative world? But before diving in, it's crucial to understand the strategies involved. Crypto trading is more than just buying low and selling high. It's a whole new financial universe. At its core, crypto trading is the exchange of digital currencies, or cryptocurrencies. These are decentralized digital assets, built on a technology called blockchain, which ensures transparency and security in transactions. Now, the crypto market is known for its volatility. Prices can skyrocket or plunge within a matter of hours or even minutes. This volatility, while it can be a risk, also presents opportunities for high returns. There are different types of crypto trading. Day trading involves buying and selling within a single day. Swing trading, on the other hand, involves holding on to a cryptocurrency for a period of time, perhaps a few days or weeks, to take advantage of price swings. Remember, crypto trading isn't a game of chance. It's a strategic play, which involves careful planning and risk management. But to navigate this universe successfully, you'll need a map, a solid trading strategy. A good trading strategy is your compass in the vast ocean of crypto trading. Now let's dive into some of the most popular trading strategies in the crypto world. First up, we have long-term holding, often referred to as hodling. This strategy is all about buying and holding onto a cryptocurrency for an extended period, perhaps several months or even years. The goal is to ride out short-term market fluctuations and benefit from long-term growth. While this strategy requires patience, it's a less stressful option as it doesn't involve constant monitoring of the market. Next, we have day trading. Unlike hodling, day trading is a more active strategy where traders buy and sell cryptocurrencies within the same day. The objective here is to profit from short-term price movements. However, this strategy requires a deep understanding of the market, technical analysis, and a lot of time commitment, so it's not for everyone. Swing trading is another strategy. It's somewhere between day trading and long-term holding. Swing traders aim to catch swings in the market, which are basically upward or downward price movements that occur over days or weeks. This strategy requires a decent understanding of market trends and patterns, but is less time-consuming than day trading. Lastly, we have scalping. This is a high-frequency trading strategy where traders aim to profit from small price changes. Scalpers often make dozens or even hundreds of trades per day. While the potential for gain is high, so is the risk. It requires a thorough understanding of the market and a significant time commitment. Each of these strategies has its benefits and risks. Long-term holding, for instance, can yield substantial returns over time, but it also exposes you to the risk of long-term market downturns. Day trading and scalping can provide quick profits, but they require a lot of time and knowledge, and the risk of loss is significant. Remember, every strategy has its pros and cons. The key is finding one that suits your trading style and risk tolerance. Success in crypto trading doesn't happen overnight. It requires patience, discipline, and a keen eye for detail. Venturing into the world of cryptocurrency can seem daunting, but armed with the right tools and knowledge, you can navigate this digital landscape with confidence. Let's delve into some tips to help you start your journey as a successful crypto trader. First and foremost, do your homework. The crypto market is complex and volatile, so arm yourself with knowledge. Understand the technology behind cryptocurrencies, learn about the different types of crypto assets, and study their historical performance. There's a wealth of information available online, from blog posts to podcasts, so take advantage of these resources. Next, stay updated with market trends. The world of crypto is fast-paced, and things can change in the blink of an eye. Subscribe to newsletters, join online forums, and follow industry leaders on social media. These channels will keep you posted on the latest news, from new coin launches to regulatory changes, so you can make informed trading decisions. Risk management is crucial in crypto trading. Don't put all your eggs in one basket. Diversify your portfolio to spread risk. Also, set a budget for your crypto investments and stick to it. It's easy to get carried away in the excitement of a bull market, but remember, the higher the risk, the higher the potential loss. Lastly, Keep emotions out of your trading decisions. The crypto market can be a roller coaster ride, with prices soaring one minute and plummeting the next. It's easy to get swept up in the hype, but remember, panic buying or selling rarely leads to good outcomes. Make decisions based on facts and analysis, not fear or greed. Remember, trading is a skill that takes time to master. You'll make mistakes along the way, but that's part of the learning process. Don't be too hard on yourself. Stay patient, stay disciplined, and keep learning. Keep these tips in mind, and you're on your way to becoming a successful crypto trader. Scene script. However, the road to crypto trading success is littered with pitfalls. Awareness is your best defense. Just as the crypto market is loaded with potential, it's also fraught with risks. One common pitfall is falling for scams. The digital nature of cryptocurrencies makes them a popular target for fraudsters. It's crucial to scrutinize every potential investment and avoid deals that seem too good to be true. Another pitfall is trading based on hype. In the unpredictable world of cryptocurrencies, it's easy to get caught up in the excitement. But remember, a sudden surge in a coin's popularity doesn't necessarily mean it's a good investment. It's essential to base your trading decisions on careful analysis, not just trends and buzzwords. Lastly, many traders fail to secure their investments properly. Cryptocurrencies are stored in digital wallets, which can be vulnerable to hacks if not properly protected. Remember to use strong passwords, enable two-factor authentication, and consider using a hardware wallet for extra security. Navigating the crypto market can feel like walking through a minefield, but with vigilance and due diligence, you can avoid these pitfalls. Keep your eyes open for scams, don't let hype dictate your decisions, and always prioritize security in your investments. Avoid these pitfalls, and you're not just a step closer to success, but also a step further from potential losses.